box area. We use those as a guide, and we add to them, subtract from them, adjust them, all based on volatility and price action. And those are things that we do here on an everyday basis as the market downticks here a little bit. I'm looking for the 61 area. As our next support level. All right, if anybody has any questions, please feel free to ask. Again, we have to wait for the opportunities to trade. We don't chase the market so much. So 61 down on the downside is our first support area. And then we'll see what happens when we get there. Again, keep your stops in place. The volatility that's in the market, we never know when we're going to get. We rallied from the highs back here down to the lows on the same bar all in 3 minutes. So this is very volatile. So stay focused. Keep your stops in place. Can we repeat the levels one more time, please? Thank you. There they are. Again, look at the chat box area if you missed them. They're there for us. All right. As the market is kind of a little bit of a range here for the last few hours as the market is trying to figure out what it wants to do after a very big sell-off on Friday. The bond market, though, is kind of making it interesting here as the bond market yield overnight was got below 2%, which is, again, with all the talk of rising rates and everything like that, that's affecting the market. And then all of a sudden we have these dynamics happening in the bond market that's kind of counterintuitive to what is happening, really happening. We have levels for the bond for S&Ps only. We have the bond market up there to help us guide us because we feel that the bond market is kind of a tell-all of what's really might be happening. And besides that, some of you know I've traded in the bond market for a while there, so I kind of have a love to it. So, did you get the levels this morning? And if you didn't, there they are for you in the chat box areas. The market continues to slowly downtick. A little support down at the 61 area. So we don't have levels for bonds. They have become a kind of very. They used to be a very good market to trade. Unfortunately, lately they've become more of a one-sided market. They don't trade well technically anymore. The S&Ps at least do trade well technically and gives us an opportunity to scalp the market. So we kind of stick to markets that at least give us a chance to make a little bit of money on it. So, but we use, like I said, we use the bond market to help us kind of can maybe focus on the bigger picture a little bit. And that's what we use the bond market for. And support down at the 61 area. As you can see here, we went both sides of our blue band, the first bar. So kind of, trying to feel its way here, trying to figure out which way it wants to go. Market's a little bit, trying to just kind of find its direction. Kind of hard to do sometimes because it doesn't really know what it wants to do sometimes. And especially the first couple bars in the morning, especially after a big Friday, and then especially after the big sell-off overnight, the market basically is just trying to figure out, are we going to continue? Are we going to sell off? Are we covering some shorts? We have a whole bunch of different issues that the market is to contend with and deal with. And that's why it is kind of volatile, and volatility is injected into the market early on. So we'll see what happens. Again, support down. The first support level we have is down at 61. got down to 64 and change there, bouncing back up here a little bit. Some of you could have made a case for buying the 65 area there if you were a little bit aggressive. Again, depending on what you're looking for. Now, I give you levels, and then there are price action opportunities also. I don't speak about those as often because that's part of our education course that we have. Our folks that are in our course can throw stuff at me, and I do answer them in the chat. And sometimes I might say something that doesn't make any sense. That's because I'm speaking to them. But yeah, so we have the levels we give out as setups, and there's also price action opportunities that occur as well. We suggest if you're trading multiple contracts to scale into a position. And again, if any of this stuff is not doesn't make sense, or if you would like to learn more about this, it is definitely a methodology that we teach. We focus in on to try to help make a little bit of money every day. And obviously this is trading, so we're not going to make money every day, but most of the time. And but that's why we keep our stops in there to minimize our losses. Now, we suggest scaling into a level only because the markets are a little bit fluid these days. If you're only trading one lots, I get it. Then you just try to find an appropriate opportunity to get in, maybe just the level itself. If you're scaling, given the volatility, maybe you're scaling a point above and below, a half a point above and below, whatever the situation may be, just so that you should be able to scale into a level, because we're not going to be perfect sometimes. There is slippage. So that's what we kind of focus in on. So a very interesting move there in the bond market. Like I said earlier, the yield below 2% early on. Not now, as they've come off a good 3 points basically off the highs. Pretty amazing. That used to be a limit in the bond market, but because of electronic trading, there are no limits anymore, and everything is just balls to the wall there. Let's go nuts. Do whatever it takes. So anyway, so again, they've come off a great deal off of those highs there, and probably obviously not below 2% anymore. All right. So let's see if there's any numbers coming out today. As the market kind of bounces off it got down to 65-ish. And we did have a nice rotation off our blue band if you were looking for a trade there. And again, coming off of our blue band here as well. So if you did take our blue band trade there, you did okay as the bonds continues to break. Now, I don't understand how. They could have been reacting to the S&Ps, because the S&Ps were on their lows when I saw the bond market last night on their highs. So that could be a little bit of a issue. 143 there in the 10-year. There are no numbers coming out this morning, so that's a good thing. Reflation trade, opening lower to start the week. The U.S. stock market futures are now in the green, up a little bit this morning. An overnight trade. The move higher comes after some investors were quick to dismiss the reflation trade. They bet on companies that do best in environments of solid economic expansion and rapid inflation. Meanwhile, the yield on a 10-year fell another 2 basis points to 143, making it the lowest point since early March. All right, nice trade there if you got in our blue band. I would tend to tilt toward a message communicated at the FOMC rather than a sole Fed governor. Now, Friday's break was based on a Fed governor saying some stuff that created a big sell-off during the day on Friday. And so now, they're rethinking their thoughts, whatever that is, and saying, well, we can't worry about what one guy is doing because after all, there's, I think, 14 Fed governors there, and they all don't believe in what he's saying. But he is an influential Fed governor, so that's why the market took to what he said and broke the market on Friday. This guy thinks, I do not think the reflation story from a fundamental perspective remains firmly in play. It seems to me only natural that we would anticipate moderate higher bond yields from current levels, and clearly that has an impact on the whole range of risk assets. My sense is the Fed continues to focus on the labor market than inflation. Well, we'll see, right? We'll see. Everybody's guessing, right? I mean, the reality of it is everybody's guessing, but that's a good thing for us, right? If you're trying to figure out the bigger picture of trading, don't. Well, you want these people to be guessing as to fundamentals, and then that way we get trade. That's all that matters, right? Let them say whatever they want to say. Credit Suisse was one of the first Wall Street banks predicting the Fed would move in 2023, even before its announcement last Wednesday. It still forecasts a period of choppy sideways trade, given the volatility associated with the Fed debate. But it's also a big believer in the Fed transitory theme, expecting price pressures to moderate in the coming quarter. Once that happens, concerns about the yields and inflation will likely calm down. He also expects the U.S. to grow at China's level this year, and GDP expanding to a whopping 7% pace, in which is almost inevitable for inflationary pressures to take place. So it's like an oxymoron. You want a good economy, but you're also going to have inflation, right? Not everybody's on the board with Credit Suisse thesis. The headwinds are building for equity markets. Mark Zandi's declared, expecting a more hawkish Fed to spank 10 to 12% pullback. Wow. And he's not a happy person. 10 to 12% pullback. Big short investor Michael Burry, who made his money on the MBSs, has also recently warned of a number of all crashes, the mother of all crashes. All of a sudden, the guy makes money on one, and then he's just an expert on crashes. With Main Street losses approaching the size of countries. Wow. Given the FOMO for unsubstantiated asset prices, meme stocks, and cryptocurrencies. Yeah, okay. That's a good thing to look at. And he declares the biggest bubble in the world history getting bigger. He tweeted on June 19th, the biggest crash in the world history is coming. Okay. All right. I don't know. Last time was pretty bad. I don't know. It's the biggest one. I guess we're higher, so I guess it would be bigger, but stay in cash, as they say in French. I mean, we are at all-time highs, so I don't know. What do I know? All right, we continue to uptick here, coming back here to our pivot. And the resistance on the upside is up at the 79 area. The volatility in the crypto market is showing no signs of abating. At the time of this writing, Bitcoin was off 7% to 32,000, continuing to sell out that ensued following the Fed's surprise hawkish turn last Wednesday. That means Bitcoin is down by more than half of its April peak of 65,000, but still has gained 10% for year to date. I don't think crypto is safe at all, but what do I know? China has intensified its crackdown on crypto mining, with authorities in Xinjiang ordering projects to close following similar developments in Inner Mongolia and Yunnan. Xinjiang, southwest province, hosts China's second largest mining community, according to data compiled by University of Cambridge, with mining shifting production there in rainy summer seasons to take advantage of the hydropower resources. Wow. I mean, they do take a lot of last month, the China State Council pledged to clamp down on Bitcoin mining as part of a series of measures to control financial risks and energy consumption. Yeah, they're not helping the situation. Yeah, there's cryptocurrencies are obviously, if you can be down 50% since April, you tell me how safe it is. Right. I mean, that's all. I mean, that's not to get carried away. It could go up 50% too in the next week. And so what? Do you call that safe? I don't call it safe. So if you ask me a question about how safe crypto is, it is what it is. I don't know if it's going to ever stabilize. I guess maybe that's the right question. I don't know. But if it does stabilize, maybe it'll be something worthwhile. But right now, with everybody, especially the Chinese government, like cracking down on it, not everybody believes it's not going to work, but just there's no controlling. I don't know. It's hard for me to understand it, so I will not understand it. All right, so we have to be a little bit careful up here at the 79, only because of the way it got up there. Initially got up to 77.5 here on the first rotation off the morning. So that 79 is a little bit more tenuous than it was early on. I would have liked to get it, but we missed it. I mean, everybody can open up a cryptocurrency. I mean, we could have one here in this room, you know? So I don't know. Will it take off? It'll probably be worth like 0.0001 cent. But hey, we can open up our own cryptocurrency. What does that tell you about how safe it is? So I'm just throwing different ideas. I mean, I'm old school, so that's why you're getting a commentary from a person who's old school about cryptocurrency. So I don't know. I don't know how much you could take that with a grain of salt. Let's put it that way. All right. We're range bound and went from the bottom of that range back up here to the top. We have a little resistance right now. Like I said, be a little bit careful there around the 79, only because of the way the market reacted initially. I would make a little bit of an adjustment there, depending on how much risk you are willing to absorb. And that's only because of the way the market is trading, not so much because of the price action. Right? So keep that in mind around the 79 here. I would have liked to have gotten that 79 initially on that first rotation up, but we only went up to 77.5 and then broke. So keep that in mind if you're trading. If you're, maybe lessen the number of contracts you're trading, maybe make an adjustment on your entry point, do something to absorb the added risk involved in the 79 area. Now, it might work perfectly. It might not. I'm just kind of explaining the risk. And that's what we try to do here on our course. We try to explain the risk to some trades and make you understand why they would work, why they wouldn't work, when to use them, when not to use them, and when to adjust them. Like I said, levels are there are levels, but they're also levels that we could tweak. And as a trader, you have a choice, right? I mean, everybody has a choice here. Traders have a choice to tweak their trades or not based on the price action. And that's all we try to show you and teach you. We're showing you the price action, and then we're trying to let you make determinations on your own whether you should adjust the trade or keep the trade the same, or tweak it or don't tweak it, right? It all depends on your risk tolerance. So like I said, everybody here, it's got different risk tolerances. So what works for one doesn't necessarily have to be the same situation that works for the other. That's, I think, obvious. So keep that in mind. And we work with everybody here to try to maximize your profit potential based on your risk tolerance. All right, we've come up here again. So this is going to become a little bit more tenuous there to 79. Any special tools you use to get your levels? We just use technical analysis that we put together a methodology based on what we have in front of us. So it's very straightforward. I don't believe in too many things to look at. The simpler the number of I try to stay focused on a few things, and I try not to get things too complicated, because trading is hard as it is, and we don't need a lot of different indicators or anything like that to help us as we come up here to our 79 area. Again, like I said, make a little bit of an adjustment here if you are going to. Maybe take the 79 straight up, or maybe a little bit above it based on the work that we do. Yeah, so again, we don't use any indicators. Bollinger Bands are the only ones that we use. A couple moving averages, but basically we're looking at the price action to help us, and that keeps us in the game. And then we, again, like I said, we have to make adjustments to those. It's all based on price action and the work that we do as far as finding levels and how to trade them when we get there, or not, right? I mean, or not. If you're more risk averse, maybe you're not taking the 79 because of the price action prior. If you're keeping it in, maybe you adjusted your entry point to getting into the top end, because we scale in, so there's a top end, a bottom end of a level. And because of the price action, we suggested adjusting a little bit. So when I say adjusting, that's what I meant. And again, because of the price action, we can see how it's running through a little bit. And some of our more risk-averse traders would probably not put the trade on at all. Again, everybody trades a little bit different, and I get it. But I also warned you of the fact that the 79 is a lot more riskier than it was, when we first got in here this morning. So hopefully you made the adjustment accordingly, and either didn't put the trade on or waited for the next level above. Those are all different ways to adjust trading. I mean, like I said, this is why we make adjustments to our trading. This is what we try to do here. We understand that the price action is one thing, and then the level became a lot more riskier based on the price action. So that's why we made the adjustment. It almost became a buy there above the 80. If you're a little aggressive, looking up here to the 86 area, that's our next level of resistance. And that's what would be we are looking at as our next resistance area. Now, like I said, if it wasn't for the fact that 79 was a level, it was almost a little bit of a buy there above the 80 area. So it became, a buy on one end, a sell on the other. So it's almost one of those situations where we're like telling ourselves, let's not do anything because the markets are telling us two different things. And we're coming up here to the 86. Again, keep the price action in mind and trade it accordingly. All right, if anybody has any questions, feel free to ask in the chat box area. Okay, we did suggest that the 79 was not going to be good because of the price action, so we have to look up here at the 86 area. Again, all we're doing is taking information that the market is telling us, and what we do here is we show you some of the things that affect the market, and then you have to make a determination on your own as to how you're going to adjust and trade it according to your risk tolerance. As we come up here to this 86 area. All right, trying to get a little bit of rotation here off of our 86 area. Remember, we are scaling into a level, so we're not going to be perfect. If you put it in at 5.5, no, you didn't get filled. Only 9 contracts traded there. If you got in at 85, but remember we said there's added volatility today, so maybe point above and below will probably be a better, dynamic to trade, only because of the volatility. And a nice little bit of a rotation here against the 86 area. If you did get in there at 85, again, we talked about that earlier. It's not like I'm making stuff up, right? Again, if you did a half a point above and below, I get it. And if you didn't get filled, that's fine. Don't worry about it. You can still, we're still on the same bar here. So you maybe make a little bit of an adjustment there. So yeah, if you put in at 5.5, you did not get filled. Like I said, only 9 contracts traded there. All right, the market's coming off here. The 80, if you did get in at 85, you're getting paid off. Again, we're not perfect, right? We are not perfect. I got to remember that. And that's why we suggested scaling in around the level. As we're still on the same bar, so maybe you'll still get filled, or maybe you get filled on the upper end, depending on what your risk tolerances are. You have to always keep tweaking the market because price action is always a little bit different. Welcome to some of the new folks that are here. We are trading mini S&Ps. If you look at the chat box area, you're going to see the levels that we gave out this morning before the market opened up. There they are. We've come up here to our resistance area around the 86 area. We warned you that the 79 might not work, only because of the price action prior to that off of the morning trade. And so that did not kind of warned you against 79 being a good level. And now we're coming up here, contest the upper level here at the 86 area. Again, if you got in at 85, you got paid off, and maybe you keep your upper scale in. And Robert, I still don't think you got it still. Oh, good. Robert B, that is. All right, we're come up here to the end of the bar, so it's a little bit, if you didn't get the 5.5, probably make an adjustment because you're probably not going to want it anymore. If you did trade it there at 85, then you're getting paid off here. Again, the level is 86, but we're not perfect, so we have to scale in around an area. And if you only trade one lots, that's fine. You just have to make an adjustment to understand the risk, and then maybe say, all right, maybe I'm not going to, maybe I'll just cancel the order altogether there because I gave it a couple chances, we didn't get it, and it's a lot more riskier now that we closed this bar and got into the next bar. So that's where we're at right now. Again, we try to explain the risk, and then you have to make determinations on your own, whether how you're going to trade a level or how you're going to trade around the level. And we explained the risk of the 79 being a lot more riskier because of the price action early on. So as long as we understand that, then we're okay. Now we've come up here to 86. Again, if you made an adjustment on your entry point there, if not, or if you canceled it altogether, I get it. Those are all logical plays as the bond market continues to sell off here after making a huge run up to the 163 handle earlier overnight, as we broke in 3 points there. The bond market, very, very weird bond play. I think they caught they caught everybody short there in the bond market. And kind of that's what happens in that bond market there. You know, they have to be a little bit goofy there in that bond market sometimes. Very, very tough little trade. All right, so hopefully we're adjusting our trades here according to the price action, and you adjusted your 86 area even to the point of even canceling it because you didn't get filled on that same bar, even when it retested it. You got a 2.5, 3 point, almost a 3 point move if you did get in at 85. Again, is it wrong to get in at 85? Not really. It all depends on how your scale is. And everybody scales differently, right? That's always the case here. All right. And you also have to understand the dynamics of the market. The market's going up, so you have to take what the market gives you. Sometimes you're going to have to take, you might be getting 3 points or asking for 3 points, but the pressure is a little bit too much. Don, I don't actually. Do you? I usually write them down, except I didn't write it down on Friday. All right, next level of resistance we have is up here at the 92 area. So we're kind of, trying to tell you, you got to cancel trades, got to see what the market is doing, make the adjustments accordingly. Everything's based on the price action. Could you have gotten long? There was a little bit of a buy there above the 80 area. If you were looking to get long, that's where a place would have been to get long. But again, it was a little bit of tough little trade there because we had 79 as resistance, but because the 79 was no longer a level based on the price action, you could have made a case there for buying it above the 80 if you were looking for a momentum trade. Was it on the upside or the downside? Because I don't remember. So what's the idea here at 86? Well, 86 is come and gone already, and we explained the risk when we were down there. We missed out on our entry point if you were trying to scale in, and consequently, we had to probably cancel the order if you didn't get in initially because of the rotation off of that 85 and change level. So once we get to a level, we needed to hit it initially. And if we don't, then it becomes a lot more riskier. So we had to cancel it or suggested maybe adjusting it. If you got in at 85, then you did okay. Again, everybody trades differently, scales in differently. There's different ways of getting into trades. So the 86 level, because of the way it traded, the market was telling us we needed to get there initially. We didn't. So the risk went up, and I explained the risk to everybody, and that it's a lot riskier than it was. The same thing happened at 79. So if you were looking to short it, I was suggesting that you didn't short it because the price action wasn't dictating the proper use of that trade at that level at that particular moment. So that's what happened there at 86. Hope that makes sense. You have, as a trader, you have the ability to make adjustments. You don't have to stick to anything. You can cancel trades. That's a different than we had in the pit when we were trading. In the pit when you were trading, you didn't have those choices. We're coming up here to our 92 area now. You're working the 92 area here. right, there we go. Getting a nice rotation there off of our 92 area. Again, patience was important. Adjusting your trade was important. All of these things come into play. As a trader, you have to make adjustments to the price action. We sold the 92 area this time. You should have got it because it went up to 92 and a quarter. If you were just trading at 92, and you got a nice rotation off of it down to 89 and change. Again, you got to take what the market's giving you. If you're going to try to stay short, if you're trading multiple contracts, then you stay short, with a couple and just peel it off as the market continues to go your way and keep a trailing stop on anything else. All right, nice rotation there against our 92 area. Again, we were looking to take advantage of ebbs and flows of the market. That's what we're trying to do here. Shorts against our resistance areas. And take what the market's giving you, and then I'll move on. Again, we're hoping we can get 3 or 4 points, but if the market's not, you have to understand the dynamics right now of the market. It's kind of got a long bias, so we are take 2 to 3, 2.5 points there, and just move on with your trade and look for the next level. It's on the upside there at 96. That's our next level of resistance. Again, this is a good day today to kind of, understand that you don't have to take levels, even though they're there. You have to look at the price action and act accordingly. Just because we have a level doesn't mean you have to take it. You have, as a trader, have the ability to adjust to the market conditions, and that's what we are trying to do here. Anything I say or is talked about, it's a taught experience. We talk about these things. We should try to help you understand what or why things are happening. Next level with resistance is up at the 4201 area. Did I say 96? I'm sorry. Yes, 2 people have asked me. What was I doing? Why did I say 96? I don't know. I don't know why I said 96, but yes, I must have said 96. Mistake. It is. It is, Glenn. Don't tell anybody. All right, and we have staying up here on the highs around the 92. Again, if anybody has any questions, feel free to ask. Right, the markets are kind of moving around here a little bit, so I'm trying to explain my mindset here as we're going along and telling you what's going on with the levels and making the adjustments accordingly, trying to explain to you the risk involved at some of the levels because of the way the price action was. And these are all part of what I'm seeing. And again, anything that I'm talking about, we kind of try to explain it to you and help you understand it. So the objective of the course is for you to be thinking what I'm thinking the whole time, right? That's what we're trying to do here. All right, market kind of shrugging off what Bullard said on Friday. Bullard was the Fed governor that said what he said and created a little bit of influx in the market. But interestingly enough, he said that interest rates are going to rise, and the bond market completely went the other way. You try to figure that out, right? As a trader, I mean, they just really screwed the bond people, right? I mean, that's all they did. When the 163 they were up overnight, I mean, if you didn't get stopped out, you got a phone call. Yeah, it literally opened up 3 points above. I mean, that's crazy. Is it lower contract? I don't know if it's. We are getting some volatility, so that's good there, Rick. I don't think the volume is that much lower. I mean, I think it's okay. Look, as long as the markets move around, that's all we care about. I don't know if it's. I haven't been really looking at the volume every day. I just know that sometimes we have a lot of opportunities to trade in the morning. Today was one of them. And other times we just kind of sit on our hands and try not to do much because it gets us in trouble. So that's what we have to do here. So keep that in mind. As the market comes off there, we got up to the 93 area and then coming off again. If you traded the 92 area, again, 3 point stop, you should be okay in the trade. If you didn't take your profits, it's okay. You're just getting paid off here. So you got 3 points for sure, kind of. And, got it right up to 80 feet. So, but hopefully you were able to trade it earlier. But even if you didn't and you kept your stops in place, you got paid off. We suggested the other levels. 79.86 were a lot more. Had to make adjustments to them because of the price action. Again, these are things that you have to, as a trader, understand what's going on in front of you and then make adjustments accordingly. All right. Next level of resistance above is 4201. This is a nice rotation here. This is kind of making up for Friday's little sell-off that was created by a Fed governor who was, giving his opinion. They're kind of discounting it. This is a good time because there's always like different people thinking different things, and that should create some volatility for us, as you can see here over the last couple days. So nothing wrong with that, and all we care about as traders is the ability to have trade, and doesn't matter, you can see how we made adjustments here to the trades this morning. So even though we have levels, we tweak them. You have to, right? As a trader, that's what you're doing. You're definitely tweaking them. Welcome to some of the new folks that are here. If we can repeat the levels in our chat box area for just a quick second. There they are. And those are the levels that we're using as a guide to the day. And again, we talked about tweaking and adjusting them. Those are all good reasons to have levels, and also we have to make sure you have to understand the price action in the trade in any given day, because every day is different, right? There's not, some days I wouldn't tell you to change the levels, or to, other days I'm telling you to change the levels because we have to, right? And it's always depending on the volatility on any given day. So. All right, we got up there, made a new high by a couple ticks. That's funny you say that. Now give me new trauma. I sound like a trauma surgeon. Just give me a clean surgical instrument to do my work. Well, it's funny you say that because I compare trading, or at least new people who are coming into trade, to kind of that situation. Like, I mean, if somebody, if you wanted to take on a new profession and you wanted to be a brain surgeon, were they just going to throw you to the operating room and told you go ahead, or you're at least going to have to learn something, right? That's what we're trying to do here, is make sure we teach people what to do before you give them a scalpel and say, go ahead, cut me open. It's funny you have that, you put that analogy up there, because that's exactly what we do. That's what we're trying to make that comparison. Glad you did it for us, though. All right. Market is again kind of hanging up here at the highs. Our next level of resistance we have is up at the 42.01 area. I'll give you a couple levels above the 42.01 here. We have 08 and then 15, 22, and 28. Above 08, we've got 15, 22, and 28. There they are in the chat box area. The new levels added right on. You're right on top of things there. Whew. That beach sun did not get to your head. Very good. Very good. Do you wear a hat when you go out to the beach every day like that? Hope so. Mm. All righty. All right, so I guess we're staying here on the highs. It looks like it wants to go up. We had earlier a buy at there at 80. Kind of a little bit tough there to, go back again. It was a little bit, it was a buy and at the same time it was a sell. So depending on how you were feeling or what you were doing at the moment, made your determination whether you did buy it or not. All right. Again, next level of resistance is up at 42.01, so kind of a little bit of a ways up there, but you never know. Support right now would be around the 79 area, 79.80 area. And kind of in the middle here, I wouldn't really do anything. It could rally, it could break. I don't know. That I can't tell you. It really could do. Okay, you would be guessing here if as to which way it's going to go from here. So patience is important. And we had a couple nice trades already this morning. So you have to be a little bit patient now and wait for the market to kind of give us our next opportunity. Okay, well put, Rick. I appreciate the analogy, continued analogy. That's true too. All right, we'll continue to stay strong there. And market is continuing to uptick. Again, you would have to tell me you were going to guess to know it was going to continue to rally. I could have said you could have taken a proper, I don't know, educated guess if you wanted to say that. Maybe we could have done that, but it is flagging, so I guess in that sense it's okay. But again, next level resistance we have is up to 42.06. $42.01, not 06. Sorry. Don't listen to me. 42.01. I don't know where I said. I have no idea where I came up with 06. At least this time I caught myself. It was a good thing. $42.01. That's our next level of resistance. Well, can the same strategy be used in other markets? I would tend to say that they would, except other markets' dynamics are a little bit different than the S&Ps. So that's the only problem that I would have with that. But definitely, you can use the same strategy that we are showing you here in other markets. You have to understand the dynamics in those markets, but I think for the most part, if they trade well technically, you should be able to use the same concepts and ideas in other markets as well. So the long and short of that answer is yes. Not just specifically just for currencies, but you can probably use them in other markets as well. Again, you have to understand that every market has different dynamics and different things that affect it. And again, the bond market, we used to trade well technically, but unfortunately, since the financial crisis, the government got involved and doesn't trade as well technically as it used to. But there are some concepts and ideas that if we use them even in the bond market these days, we would get a good result from them. So it's not completely that we don't use the same ideas in the market, in that market as well. It's not that they won't work, except you have to pick your spots there a little bit more clearly. So, for instance, the bond market has become more of a one-way trade. So I would look to pick your spots to get in and kind of ride something a little longer there than usual. But that's me. Like again, I don't trade bonds anymore. No, would like to, but can't. All right, so we're up here, slowly inching our way up. 01 is our next level of resistance. Nice rotation there off in the morning, and they sold it off right initially. Like I said, you could have made a case for buying it down there if you were a little aggressive, but then you just continued to rally after that initial break, and a nice rotation there, kind of making up almost Friday's losses. We got right up to 42 even there. We're looking at 01. All right, there's the 01 for you. And right away, they didn't even worry about nothing there. Just kind of just got it for us. See what it wants to do up here. Keep your stops in place no matter what. We just never know when things are going to, keep going or not. Just like they did there in the bond market, where they really kind of messed up a lot of people there. All right, I'm trying to work this 01 area here. See what it wants to do. Again, we gave you levels above here. We got 08, 15, 22, and 28. All right, thank you there, Don. Okay, we're working this 41 area here. Oh, 1, sorry, 41. What am I saying today? Jeez. It's a good thing it was a long weekend. Well, not really. It was Father's Day weekend. Maybe that's why. I don't know what's wrong with me. I keep saying different numbers. Again, if you didn't like the price action when it got up there, you were given a chance there to get out of some. Again, we make adjustments according to the price action. We've done that earlier. We continue to do that. Again, you're working this one area, again, depending on how you scaled in. Maybe you are going to get out of some here, maybe not. Again, so it's a matter of knowing how long the level goes up. The market goes up to a level and hangs out there, and you have to make a decision as to how you're going to trade that area once it's there, and everybody trades it, differently. Huh. The Supreme Court ruled that the NCAA cannot bar modest payments to student athletes, rejecting the argument that the compensation would alienate fans. That was their argument. That one I would have never bought, but hey, okay. Well, that's good. I mean, some of those kids are just good. And then the rules about getting everybody in trouble. That was a terrible, flimsy argument, though. Alienate fans. Anyway, all right, we're just kind of working this area here, this 01. Kind of the dynamics of the market, very, very strong, staying strong. So we'll see what it wants to do up here. Just make sure you keep your stop in place. And again, if you don't like the way the market's reacting, it's giving you a chance to scratch them right now. And, nothing wrong with that right now. If you feel that the market's you didn't take your loss and they're just kind of hanging here, coming back down here to a point where you're saying, all right, well, maybe I can just get out of this. And that's an option, right? That is an option to trade. There's 3 things that can happen in a trade. Obviously, you can make money on a trade, you could lose money on a trade, and you could scratch a trade. And two of those things are not bad, right? Making money and scratching sometimes are not bad. Some of my best trades I ever made sometimes was scratching a trade. Believe it or not. All right. Again, nothing wrong with scratching a trade or cutting your losses off, or maybe if you scaled in on the upper end, you're making a little bit of money, but because of the price action and how it's trading, nothing wrong with saying, okay, I'll just get out and wait for the next opportunity. All right, next resistance area we have is up at the 08. Amazing. Amazing how it's completely shrugged off everything. Bonds also shrugged off everything. And if you take the last 2 days together, probably haven't done anything. Just giving us some volatility, which again, we are thankful for. That's all we're going to ask for, some opportunity to trade. And then we have to work those trades accordingly. All right, we're just kind of hanging up here on the highs. Next level of resistance we have is up at 08. Again, we've had to work some of these trades. They haven't given us exactly what we were looking for, but they haven't really hurt us that much either. So, I mean, we're trying to get 3 or 4 points on our trades, but unfortunately, the market's not giving us those opportunities, at least not right now. But we're not getting run over by them either. So I guess there's something to be said about that too. And we're basically having to work trades today. I mean, some trades are easy. They go to a level, they bounce off, they give us opportunity to trade it, and we make. Today we're having to actually work it, decide what we're going to do, how we're going to trade it, how we're not going to trade it, how we're going to adjust, how we're going to maybe get out, maybe scratch it. That's working a trade. And trading sometimes requires you to work a trade. It's not always going to be, we're going to go to a level and we're going to bounce off and it's going to be easy peasy. Not today. Today is, but again, like the good thing about it is that they're not running away from our levels. They're giving us a chance to work it. And that's the good thing. Sometimes, we don't even have a chance to work it. They just run right through and we have to take our stop and then that's that. But today it's a little bit different. So I guess there's a silver lining, even though we're not making as much money as we should want to. Is a trend day? Yeah, maybe. I mean, who knew that we were going to, you need to tell me that like at 8:30. And even at 8:30, they broke it down first, right? They didn't even rotate it to the upside. They broke it down first and then rotated it to the upside. So even then, you can tell me it was a trend day. Not right away, anyway. Now we continue to uptick here. Next level of resistance we have is up at 08. Okay. I believe that. We did have a buy there above 80. That I will say, if you were, unfortunately, it kind of counteracted our 79? So that's why I couldn't really say it, because it was right up against it, but I did say the 79 was not good. So that was a little bit of a, and it happens sometimes. So you get one thing saying one thing, another one thing, another thing. So usually the thing to do is not to do anything. Oh, and by the way, that's a trade too, right? I mean, you can get short, you can get long, and then you can also not do anything. That's also a trade. All right, well, we continue to uptick. Next level resistance we have is up at the 08 area. Okay, coming up here to the 08 area. Well, finally, nice quick rotation off of the 08 area. That was the no wait trade. This is what we like to do. Just like get in, get out. Okay, so nice little trade there. Again, scale out, scale into your trade, scale out of some of them right here, then see if we can't get a little bit more. All right, nice little trade there for us if you did get in. And again, you got right up to 8.25. So if you just got the 8 straight up, you're doing okay with this trade. Again, remember I said picking your spots, waiting for the opportunities, being patient. They all pay off. And this was a good example. All right. If you take some profits off, if you have a trailing stop, you could do that too. If you just want to take your profits here, that's well, that one works as well. Anything above 9, I would say right now, you want to be out of any longs if you wanted to have a tight stop. If you got in at 8, obviously you got to take your profits. This is only on any extra contracts you have. You don't want to. You don't want to sit there and just take a loss on this trade here. But hopefully, if you got some extra contracts, take some profits off, keep a tight stop. Again, there's different ways of trading. I'm just throwing different ideas at you. Everybody's got different risk tolerances. Everybody trades different number of contracts. Not everybody trades the same. Next resistance level we have is up at 15. Amazing. So we gave you the levels above. We have above 08, we've got 15, 22, and 28. Now, as the morning session here comes to an end, the trade dynamics also change, remember. So we'd like to focus more on the morning hours to give us some good opportunities to trade. The ebbs and flows are different in the late afternoon. You get more one-way trade than you do in the morning. So keep that in mind if you're trading. As again, we are focused more on the morning hours to give us our good opportunities to trade. The dynamics, the ebbs and flows, the amount of trading that's done in the late afternoon is different than it is in the morning. There's a nice rotation here off of our 08 area. Again, if you did keep your stop in there at 9, you're getting paid off here very nicely on anything left over. So nice rotation there against the 08 area. And again, anything I say is taught, so I don't have a tendency of making stuff up. The ideas and concepts are taught, and they are there to help you if you've been trading for a while. Maybe different ideas add to your arsenal. If you've never traded before, want to trade and learn how to trade, or learn my methodology, then that's also what it's there for. So it's there for both experienced and non-experienced traders. And we do it in this venue right now, and they like in the late afternoon, and we use live charts to explain the different concepts and ideas. And again, most of the ideas are using the room to show you what we're doing and how we're doing things, and our charts. So that keeps us, in the game, and also I like to use the live charts to help explain things much easier that way. And any of this stuff interests you, please ask us a question or ask anything, or want to know more. Definitely let us know. Put your just ask us in the chat box area, and we'll be able to get back to you and see if we can help you out. But this was a working kind of, every day is different, like I said. The trade is definitely different in the afternoon. That's why we focus more on the morning hours. Today was kind of a day where we had to actually work some levels, work some trades. It wasn't so straightforward. It was one of those days where you had to understand that we had to cancel some orders, take a little bit of a profit, maybe even scratch an order. All of these things were different concepts and ideas that you have to consider when you're trading. Today was one of those things where everything came into play. We even our last trade here was a nice rotation, really fast. That's what we'd like to see. Didn't happen till the 08, but hey, it did happen finally. Where we didn't have to think so much. We didn't have to deal with it. We didn't have to work at it. We didn't have to work a trade so much. It just kind of gave us that rotation, and it was very nice of it. But hey, like I said, we had different opportunities today. It was a different kind of trade, which was fine. Nothing wrong with that. At least we got trade. We've been here where we've not done much, kind of just watched for a while, for an hour before we got something going. And so we have to remember that when we are trading, right? Just remember that we're going to, have days where we're going to be really busy and have days where we're not. So we got to be thankful when we're busy. And today was one of those good days. What can we say? Again, if you have any questions, please feel free to ask. Well, we try to stick to about 3 or 4 point stops, and we would like 3 or 4 point profit targets as well. Again, that's all dependent on price action. Today, probably we kept our 3 or 4 point stops, but our profits were sometimes less than that, 2 points, 3 points. We're getting a nice trade here against the '08. If you're having a trailing stop, this one's giving you a lot more. A trade like this '08 makes up for a lot of other ones. If you can have multiple contracts and you can have a trailing stop, like I said, above '09, you want to be out of any shorts, and this is a way to eke out some more profits off of this trade. But those other ones that we had to work, I was suggesting we can scratch them. We were taking a little bit less than 2 points or even a point on it, only because the market dynamics were different at the time. So theoretically, if we put on a trade and we don't know what's going to happen, we're looking at 3 or 4 points. Usually, we're looking at, depending on how slow it gets, 2 to 3 points is our objective on normal kind of days where it's not. The volatility today was a little bit more when it came in this morning, so we suggested 3 or 4 points, and that's where we were. Again, every day is, again, depends on volatility, is a little bit different, right? And I mean, when markets were really crazy last March, we had like 10 point stops with 10 point profit targets, and we were getting them. So again, we are definitely dependent on volatility. We can't create it. All we can do is trade it. So that's where we're at. So we have to understand that each day is different, but most of the time it's 2 to 3 points is adequate amount and gives us a good profit potential, and not a pie in the sky number. All right, I'll take a little bit of a break here, and I'll get back in a bit. Remember, the levels above, we got 15, 22, and then 28 above this '08 area here.
Hey, quick shout out to Tony C. Hey, Tony, welcome. Quick sound check for you. Hey, Robert E. Let me know if you're there, Robert E. Steve P. Let me know if you're there. Hey, Agatha, did you, Hey, Adam K. Thank you for signing up for Saul's Friends and Family. Hey, Robert, how are you? Adam K., thanks for signing up for Saul's Friends and Family. Attica, did you get a chance to do that? Let me know. Hey, Anupam. Carlo, nice to see you. Don, Glenn, Joel, KG. Mahi, let me know. Robert, I'm doing okay. How are you doing? Mark L., Peter O., Rob M., any questions? Tony, let me know if you're there. This is a Zoom trade along. We're pretty much done for the day as far as activity. Right now it's 12:18 p.m. on Monday, June 21st, 2021. Everything here is for educational purposes only. We start here at 9 a.m. We go through the morning session until about 11:30, 12 noon. And then we have, hopefully, banked our money for the day. This service is offered in a couple different stages. One is a monthly subscription, which is on sale right now. Let me send that out to everybody. Take the time to sign up and join us on a daily basis. It really just shows us that you're interested and worthy, have the ability to pay, not pulling our legs. And then Saul has his course and his mentoring work. So the first thing you do is you sign up for as a monthly member. Then you have the opportunity to talk and work with us, have a trading consultation about if you want to be part of Saul's course and his mentoring service. Pretty straightforward stuff. We're focused on scalping intraday, particularly the morning session, trading the S&P 500 E-mini. We look to be done for the day early. 2, 3, 4, 5 trades based on a price action trading methodology. So welcome aboard. Rob, that's a very good question. So price action trading, so focusing on the S&P 500 E-mini. Your host, who is a 25-year veteran trader, he's trading himself, which means he puts his money where his mouth is when it comes to his trading technique and his intraday trading. So let's just go through what the deliverables are based on the service from an educational point of view. Is that Saul, who is your host, has developed a trading strategy called price action trading. Now, price action trading has been around for a significant period of time. I consider it a great start for new traders and the last bastion of hope for experienced traders that are just not getting it done and really need help based on their trading career and the individual trades that they look to do in banking their money for a particular trading day or particular trading week, particular trading month. So let's go back to what this is, and again, what it isn't. And Saul does a great description in the morning, right around the bell. When he pops in and takes over the mic, he talks about the setting of a roadmap for the morning's trade based on specific prices and zones that he has identified for his own trading, and he gives them out to you first as a opportunity to see if he's good or not. If the levels have like the market has a reaction, the price change has a reaction in and around the levels. So let's look at his levels for today. He had a pivot, which is a price, and then he had prices on top and bottom of that pivot based on support and resistance. Now, thank you very much for posting that. Now, that's posted in the chat area. So he gives them out in audio, and then he posts them or has them posted or asks somebody to post them in the chat area. Mark L. posts them on a general basis, and we appreciate the posting of those levels. He had the pivot at 41.73. Put that in the middle. Then he had resistance at 79, 86, 92, 42.01, 08, 15, 22, and 28. He had support at 61, 52, 45, 36, and 27. Now, for traders coming in here that are new, or traders that are experienced, you might pick up on pretty quickly that Sol's levels are pretty good, and they work as a opportunity or a roadmap for this morning's trade as a trading advantage to you and to Sol over other traders. So I guess the key is we know, or you may know soon, if you look at trading platform or trading software, that there's a lot of levels out there. There's a lot of things to pay attention to or get distracted by in trading. What we do here is we look to focus you on doing 2, 3, 4, 5 trades during the morning session, and coming out of that activity a better trader than you came in based on your interaction with us from an educational point of view, and ultimately being able to develop consistent profitability based on price action trading and Sol's proprietary levels and zones. That's as simple as it is. Having said that, the most important thing in the room, in this Zoom room, is Sol. The second most important thing is his proprietary scalping levels and zones. And the third important thing is the adaptation based on price action in and around those zones and levels, and how it relates to putting trades on the entry price, the defensive price, stop, and the exit strategy. If you can just learn that, you're way ahead of the game. And that's what we do here every day. Okay? Now, the advanced class for individuals that want to be taught by Sol himself, there is an opportunity to do that also for those that are part of Sol's monthly and his and right now it's on Friends and Family, so I should probably send that out to you. You save $279 a month, which is a phenomenal opportunity. And that's out to you now, so you don't miss it. So for those that are interested in sticking around, stick around. Come back again tomorrow. Ask questions now if you would like. Work your way into Sol's world. Take a moment to do that. Hey, Agatha, did you do that already? Did I see that come through? Just let me know back in chat. Rob M and Rob E. Robert M. Robert E. Let me know. Tony C. Let me know what you're thinking. We had a nice group in here today. Sol has a pretty nice group on a daily basis. And again, it all comes down to you. Sol is already trading. He's already happy with what he's doing. He does make adjustments like everybody else based on the action of price. That's important for you to know. This is a taught experience, which is important for you to know. It's not for everybody. And what does that mean? That means that Some people want to do whatever they want to do. Some people want help. The help part is amazing because you're getting the help from somebody who is, you're standing on their shoulders so you don't make all the mistakes and all the, you limit the pitfalls because Sol has already done it for 25 years. That's an amazing person to be able to talk to. He is scalping the market and trading the market like you wish to do during the morning session. And if you want to be like Sol, then stick around and work your way in. What is EOD? Trading Forex pairs. We're not big fans of Forex because of the manipulation by the banks, but if you're doing well in it, that's a whole nother Megillah. We like to do one thing and do it well. In this case, it's the S&P 500 E-mini. End of day. Okay, great. Makes sense. Okay, cool. And the bottom line is that if you can bank your money for the day based on your current trading experience and you're happy with that, stick with it. If you want to learn how to scalp the market and make $100 a day, $200 a day, $300 a day, raise your contract size. In other words, it's more bang for the buck, based on raising your contract size. The concept here is how do you do as few trades as possible, bank your money, and then go off to the safety zone with your money. And that's teachable, and that's what we do.